Hello to everyone who's just joining us. Thank you for attending our Green Finance, Green Careers online Zoom meeting. Just want to kind of mention, if you can, please keep yourself muted just for recording purposes. You'll see some messages popping up in the chat from time to time. That will be from Gal, one of our board members. You can feel free to ask questions. In general, we're Green Home NYC, a group of all volunteers. We've been established for quite some time, over a decade, maybe longer, in New York City. Normally, we would do these events in person, but as we all know, we're living in a very interesting times with COVID, so we've decided to bring everything online. In general, we do an event once a month. This month is on green finance, the importance of green finance. We have 5 incredible panelists that all have a slightly different background, and will kind of speak on their experience, their career journey, their educational journey, what they're doing now, and share tips, tricks, career advice, and have a general discussion on the importance of green finance. As mentioned previously, please feel free to send your messages to Gal or publicly in the channel. I'd also like to just say that we have another group as well, the forums group. At the end of this event, I'll post some information on about our LinkedIn page, our Facebook page, and the way to discover our events. The Green Careers has 2 more events planned for the rest of the year. One will be on nonprofits, and the other one will be on government and the role within the Green Careers group. That being said, I think we'll give it 1 more minute for people to kind of funnel in. I'd also like to just encourage everyone in the chat to feel free to send out your LinkedIn pages, any type of information you might have, links, things that you think are important for people to know. Again, if this was in person, it would definitely be more interactive, and there would be networking afterwards. So I would love it if you guys were networking in the chat. All right. So that being said, I would like to introduce our confirmed speakers. I'll have them each go over, their career background, educational background, etc. But just to highlight, we have Robyn Liska from Bank of America, VP of Equity Capital for Energy and Power. We have Zaira Akhemodova from Enter Solar, representing Corporate Finance Group. Barry Korn from Barrett Capital, the CFA on building energy efficiency. Christopher Rogers from NYSERDA, from the Solar for All and Low to Moderate Income Programs. And finally, we have Patrick O'Donnell from NYCEEC, VP of Engineering, who focuses on technical due diligence for financing projects. So as you can tell, we have a quite diverse panel from different aspects of project financing, green financing in particular, not only within building energy efficiency, but also with renewable projects. That being said, I would like to start off with Robyn Liska. Please go ahead and introduce yourself, your career, your education, and we'll take it from there.
Great. Well, thank you so much for that introduction, and it's great to be here with you today. Appreciate the opportunity to join this group on a topic that I'm very passionate about. My name is Robyn Liska. As introduced, I am a vice president in the Equity Capital Markets Group at Bank of America. So I suppose before I go any farther, I should state for the record that I'm here today sort of as an individual professional, not as a representative of the bank, but obviously we'll be happy to talk about my work there and my broader career. In our equity capital markets group, I cover companies in the power, utilities, and renewable energy space, as well as emerging clean tech companies that are addressing the energy transition that's happening in our country. I also cover and can speak a little bit about some of the oil and gas companies on the other side of the energy spectrum. I have been in my current role for about a year, prior to which I worked in our investment banking division, covering those same power and renewables clients, and have been doing that for the last 6 years or so, first at UBS Investment Bank and now here at B of A. I came to green finance from a background in all things green, but not necessarily a background in finance. I joined the finance industry after graduating from Georgetown University with my MBA. Georgetown is also my alma mater from undergraduate alma mater. I have an undergraduate degree in science, technology, and international affairs with a concentration in energy and the environment. Bit of a mouthful, but what that boils down to is that I am very passionate about trying to address climate change. I've always thought that renewable energy and the way we produce and use energy in this country is a critical component to solving the climate change puzzle. And the technology that we have today with renewables and now increasingly storage, et cetera, I think is really transformative. So I wanted to find a way to get involved in that. I started my career, as I said, outside finance. I worked briefly at an environmental think tank called the World Resources Institute in Washington, D.C. It was sort of during my undergraduate years and then shortly afterwards. So I can speak to that. I think it was a great exposure to the industry. Had also interned at places like the Sierra Club and some nonprofits. I then transitioned after that to an environmental consulting company called ERG, which is one of the 2 largest consulting companies focused on the public sector. So I did there a lot of contract consulting work, helping to run programs for groups like the US EPA, the DOE, had worked with NYSERDA in the past as one of my co-panelists works, and various sort of state environmental energy agencies. Let's see, and then just to kind of wrap up my introduction, in my current role, I help companies raise money by issuing equity in their businesses so that they can fund their operations. Increasingly, though, the use of those funds is investments in renewables and clean technologies. We are seeing a massive amount of interest across, I would say, my entire client universe, whether they are maybe a company that you might not consider green today, but certainly I think people recognize that the energy system in this country is shifting, and that they need to keep up. So, we help companies identify solutions and the best way to raise capital efficiently and reduce their cost of capital so they can put those dollars to work. Increasingly, and a growing number of those clients are dedicated to renewable energy or clean tech, energy efficiency, e-mobility in the electric vehicle space, et cetera. As a side passion, I'm also involved in our ESG capital markets group within my broader group. We have a very large focus at Bank of America on sustainability and green finance. We have a $300 billion commitment as an organization to direct the bank's own capital into investments in companies that are sustainable and targeting sustainable solutions, which I'm quite proud of. We are also the leading green bond underwriter on a debt capital markets perspective of all time, and that's a product that we helped pioneer. So one of my personal goals is to bring that leadership on the debt capital market side into our equity capital markets business. There is a huge uptick and surge in investor interest in all things ESG, which for the group is environmental, social, and governance, all critical components in my view of a sort of a truly sustainable company. So can talk a little bit more about that, but we're seeing a lot of inflows of capital into that space, and a lot of focus from investors trying to find and identify places to invest in companies that are sustainable. So hopefully that was a helpful intro. I'll pause there and turn it over. Happy to perhaps elaborate on any questions that you might like to learn more about.
No, that was great. Thank you for that. You know, it's pretty obvious that you have been in the industry, or, you know, been fighting with a mission for many years, from your academic background all the way through your career. Yeah, I mean, again, as I said, please feel free, you know, as attendees, to write questions in the chat, and we'll address them later. I think for now we can move on to Zaira, and we'll follow up with questions as each panelist introduces themselves and their work.
Thank you, Lou. I am Zaira Akhmedova. I'm super excited to be here. I think this is a great event, so I'm very excited to talk about my career journey and help any of you guys in any way possible to get more insight into how to enter into the sustainability field. So just to give you guys a little bit of background, I am from Kazakhstan. I was born and raised there. For a lot of you guys, for those of you guys that don't know, it's in Central Asia. It's a country right under Russia. We speak Russian. I came to this country at the tail end of high school and went into university, namely University of Maryland, where I studied finance and accounting. When I was going through, you know, a little bit of high school here and then through my university studies, I didn't really know much about renewable energy. And even when I entered into the workforce, I didn't know much about renewable energy. I come from a country that is super oil based. Like, we have huge oil reserves, and oil is kind of like what we say is like in our, we embody, that's like in our DNA kind of thing. So that's the kind of background I come from, where I didn't really think through or even have too much exposure into renewable energy. However, when I entered into the workforce after graduating from University of Maryland, I went and did an internship at GE as a financial analyst, where I got a lot of exposure into the financial kind of aspects of the company and how a big company like that financially manages and funds its operations. After which I went into Ernst & Young, where I did management consulting. At Ernst & Young, I got a lot of exposure into different financial services companies, a lot of their issues, and helped implement strategic plans and process improvement type of projects to improve their operations. And after Ernst & Young, I went into JP Morgan. And in JP Morgan, I did similar type of work that what I did at GE, but it is at JP Morgan where I've gotten exposure into renewable energy. So while I was there for about a year, doing a lot of financial management type and financial forecasting type of work, there was a group forming which was just forming to help JP Morgan generate or come up with a strategy to be 100% renewable in 2021. And when I say to help, help implement that strategy for JP Morgan, it's not for JP Morgan's clients, but for corporate buildings of JP Morgan. As you guys can imagine, JP Morgan has a slew of corporate buildings where it houses its employees that emits a lot of carbon, and it's very carbon intensive and utilizes a lot of electricity. So the leadership had decided to implement a strategy to help JP Morgan be 100% renewable by 2021. And this is the first time that I got exposure into renewable energy. So what I helped as part of my role is develop a financial model that helps evaluate a slew of these projects to help the bank understand what their returns would be, how much they would be saving, and whether or not these are the projects that they want to go forward with. I absolutely loved it. I learned everything that I could about renewable energy. It was definitely one of the experiences where how you would say, where my interest peaked so much that I was sure that this is something definitely I want to take my career towards. However, JP Morgan is a very structured and very slow type of environment where just even getting that strategy approved was taking a very long time. And by the end of my 2 years there, I got to a point where I wanted to take a break from working. So I decided to travel around the world. I traveled for about 7 months. I went everywhere from South America to Europe to Southeast Asia, New Zealand, Australia. And that's where I saw the slew of massive renewable energy developments across the world, right? And it kind of showed to me that it was, first of all, it was fascinating. Second of all, I was a little confounded because I realized how behind the United States is behind these countries in terms of development of renewable energy. So that definitely solidified my interest in renewable energy. So as soon as I came back, I said, this is what I want to do, but I really wanted to be in the core of renewables, not at a bank or at another organization that has renewables kind of as one of the business units, but I really wanted to be at the core of it. So I applied to Enter Solar. I got the job within a couple of weeks. So now I'm at Enter Solar. I am a manager in financial strategy. I work very closely with the executive team, namely the CEO, the CFO, and the board of directors, to help support and drive the financial strategy of the company. So my team utilizes both qualitative and the quantitative aspects of project development pipeline and the execution implementation plans to help the management understand what our financial direction of the company is. I also help get ahead of any obstacles or risks that we see to better get ahead of them and to be more equipped in exercising or in implementing our financial strategy. That's about it.
That's wonderful, thank you. And it's really interesting to hear how your cultural background had a certain type of lens, and then your traveling expanded that, what you had already kind of experienced at JP Morgan. So you're exactly the type of transitioning person, as opposed to Robyn, who's been in it for quite a while. It's two different models, and I think it's really important to highlight that everyone has a different timeline in their journey to getting into the sustainability field. So thank you for that. I think now we can move on to Barry Korn and hear a little bit about what he has.
Thank you. So I'm a numbers guy. Some people read novels, I read balance sheets. I started off with an accounting degree, got a master's in finance. I was working down in Wall Street, got my CFA, Chartered Financial Analyst, as a securities analyst and money manager for investment counseling, investment management firm. And then wanted to have a more active role, got into the computer leasing and equipment leasing business. From there, I transitioned into real estate. I'm the president of my condominium association, which gave me knowledge of condominium associations and cooperative associations, cooperative corporations, which is very big in New York City, where I live. And that allowed me to develop a niche financing co-ops and condos and basically doing infrastructure projects for the buildings. And in doing these infrastructure projects, I was exposed to energy efficiency and felt that was an area that made a lot of sense. It paid for itself financially from the savings and the improvement, in addition to being green and helping the climate situation. And so I set up a separate company, Barry Green, where we serve as a project manager, helping buildings, mostly multifamily co-ops and condos, serving as their owner's rep, project manager, whereby we will come in, bring in our engineers, determine what kinds of opportunities there are for improving the efficiency of the building, whether it's lighting, LED lighting, HVACs, other types of efficiencies that we can then implement and finance if necessary. And so that's what I do on a day-to-day basis.
Wonderful. And can I ask, so you studied finance and accounting. You have a traditional background in that sense?
Yes.
Yeah. Okay. Wonderful. Okay, so moving on to Chris Rogers from NYSERDA.
Hi, can you hear me all right? All right,
Sounds
excellent.
good.
Well, I'm very excited to be here. Thank you for inviting me to speak on this panel. My name is Chris Rogers. I'm a project manager at the New York State Energy Research and Development Authority. I work within the Distributed Energy Resources team with the focus on solar. And much like Robyn, I must state that I'm speaking as myself as an individual and not on behalf of the state agency, but happy to speak with you all and answer any questions about NYSERDA. So my career journey has kind of taken a couple of shifts, I guess a couple of minor shifts. I started out working, my first job out of undergrad, I was working at a personal bankruptcy law firm. And I always started with this interest in environmentalism and energy policy and environmental policy. And so I entered law school with this idea that I would be an environmental lawyer. I wanted to work in the federal government. This was a few years after Al Gore's documentary came out, and it really kind of opened my eyes to climate change. I read a human development report that I think that was put out by the UN, and it really put into concept the large population around the world that was living on only $1 or $2 a day, and how climate change was a reality for billions of people around the world right now. And so this is my idea was I was going to go into the federal government. I was going to be a lawyer, and I was going to fight for improving air and water quality emissions. And sometime around my second or third year in law school, I realized that I guess the legal prescriptions for sustainability, they're more retroactive. They're dealing with mistakes that have happened with some key exceptions, and they're less prescriptive as to the future. And that got me more interested in energy policy. And so I got my JD at Washington University in St. Louis, where I also went to undergrad. And then I went and I got an environmental law or a master in laws and environmental law at Vermont Law School, with the idea that I wanted to work on international environmental policy. And so I ended up in DC, first at the United Nations Foundation, and I was there. That was my first internship before going on to an international development contractor that focused on monitoring and evaluation. And that was my first exposure indirectly to different renewable energy projects that are going around the world. But I didn't really have a choice as to the projects that we would conduct these evaluations on, and I wanted to get closer to that. And so I went from there to the National Association of Regulatory Utility Commissioners, and they have they're a trade association for the utility regulators in the U.S. but also Canada. But they have an international team. And what we focused on was providing technical assistance to electricity regulators around the world. And my projects focused mostly in Africa. And so I got the opportunity to get even closer to the projects that I wanted to help stimulate the development of but that was through the lens of electricity regulation. And I would say that depending on the country, the actual, I guess, the focus on renewable energy versus just energy broadly, that really just depended upon, where the country was at. So, electricity regulation in Ghana is far more developed than it is in Ethiopia. It's far more developed in South Africa than it is in Tanzania. And so, I did get the opportunity to really see what it was like to develop these laws in countries that, depending on the country, I think what's really unique in the United States is the different state level electricity regulations. They represent many different countries around the world. In the South, you have vertically integrated systems which is the more traditional model, and then you have fully deregulated states like New York, which there are many countries around the world that are transitioning to that now. And so, depending on what the country is actually really helpful to bring, say, a regulator from the state of Georgia to a country that still had a fully regulated, I guess, electricity system. And then from there, I still wanted to get closer to the projects, and that's what brought me to NYSERDA 2.5 years ago. And my work there focuses on our incentives, primarily for the low to moderate income programs that we have, focusing on both single and multifamily affordable housing. And in this position, I've gotten to see, I guess, the real primary focus of the incentives. We have to work very closely with different stakeholders, both from the developer community to nonprofits that are working with populations who are attempting to support, to the customers themselves, whether that be household level or the owners of multifamily housing. And it's all about finding what incentives are bankable. How is a project going to pencil? And it's about, I guess, examining and assessing the market to find out, if the market is growing at a certain pace, how can we get it to go faster? Or if there are areas of the state that are being missed out, what can we do to stimulate that? And, it's kind of been a long journey from, originally seeing, a documentary about climate change, and then helping to work on incentives and grant programs that help these projects actually get off the ground. But it's, there's probably a more direct route that I could have gotten there, but the lessons that I've learned along the way, from different countries, from being in DC and law school with that regulatory analysis background, has been very helpful. And I use a legal, even though I've never practiced as an attorney, I use it all the time in ways that I never really expected, and it's been a great journey.
Yeah, no, that's incredible. I mean, I in my master's, I studied a lot of policy and regulatory systems, and I actually did my, I think here in the US you call it a capstone, my thesis in Tanzania on blockchain technology and, supposedly the implementation of it with off-grids. And I too noticed how, each country within a continent is very similar to the US and the regulatory market. So yeah, it took you a little bit longer to get where you are now, but your process continues to evolve. And you're right, like all of your background adds to what you're doing today. You're able to see it, in a holistic picture. So yeah, thank you for that. And last but not least from our introductions will be Patrick O'Donnell.
Hello, everybody. Let's see. Okay, wait one second. Okay. Yeah, thank you, Luis. Pleasure to be here. Thank you, Green Home NYC, for having us, my fellow panelists, and most of all, to you guys in the audience. Thank you for making the time to join us today on this important topic and growing career sector. So I guess if some of this seems scripted, it is. Okay. lesson number one, prepare, prepare, prepare. But I'm going to jump into a couple stories, and hopefully it's meaningful and helpful to you all listening. So I had just sat down in the lecture hall. It was a muggy afternoon in Iowa, late spring 2006. My environmental studies 324 professor started reading. One of the most fateful errors of our age is the belief that the problem of production has been solved. The illusion is mainly due to our inability to recognize that modern industrial system, with all its intellectual sophistication, consumes the very basis which it has been erected. To use the language of The Economist, it lives on irreplaceable capital, which it cheerfully treats as income. That's E.F. Schumacher from the book Small is Beautiful. He was talking about how we treat our natural resources, such as fossil fuels, or our atmosphere, or our ocean, as reoccurring income, something that we can use indefinitely for our benefit that replenishes itself, when in fact these resources represent a finite amount of capital, something that cannot be readily replaced. I went on to learn the Earth is a closed system, there are physical limits, it's finite, meaning there's only so much capital before it runs out. And this goes for all resources on Earth, even those used to create solar panels and batteries, which, you know, we got to figure out. We got some work to do on that. Reading up on everything I could in college about our impact on this Earth and climate change, I used to be sort of anti-development. I realized, though, that development was inevitable. So the question then becomes, how can we develop in a way that is least impactful on our precious earthly capital? Buildings are one of the longest lasting, most expensive consumer products money can buy. We spend 90+% of our time in them. In NYC, they produce 71% of all greenhouse gas emissions. I will say though, there's a caveat on that statistic. Updated March 11th, 2020, we now spend 99.9999999% of our time in buildings, mostly at home. So I made it my mission to help solve one of the biggest challenges of our time. As a mechanical engineer, I started out at an engineering and design consulting firm focused on unlocking energy efficiency in buildings. So that means auditing commercial industrial facilities in the Midwest, designing efficient equipment replacements, developing the control sequences that would turn off the light bulb when it wasn't needed. Seems pretty straightforward, right? And then managing their construction, verifying that they actually performed as designed. So I got to see a lot and sort of made it my goal to keep learning throughout the 6 years I was there. So fast forward to October 2015, I was getting super burned out on like all this, you know, saving the world one building at a time, the grind of consulting in Wisconsin, and started to apply to jobs in New York. So I had just finished like a whole round of like 5 resumes, 5 cover letters, multiple follow-up calls, emails, in-mails on LinkedIn, with no response to any of these people that I had applied to. And I was like, well, I thought it was a pretty good fit. So I was about to start a new round, new jobs, new application, new cover letters, the whole process. But then I said, no, I've done all this work. I'm going to ping all the hiring managers again. And it was only then that I started talking to the hiring manager at my current company. So then when we finally did talk, he's like, well, you know, we like your resume and all, but we normally don't hire outside of New York City. You know, we have plenty of people here and, you know, we don't relocate, whatever. We're a nonprofit. We can't really fly you out for an interview. So I said, oh, well, I'm going to a friend's birthday in New York City in December. I could stop by and meet the team. And he was like, okay, let's do it. So a day before I was supposed to leave to New York City, in December for the weekend, I realized that my dad's old suit that I'd been wearing for interviews, like I looked like Doogie Howser, and that wasn't gonna fly in New York. So I arrived in New York City Friday night, went to a department store and picked out a suit, had it measured. They said it would be ready by Sunday. So I went to my friend's birthday on Saturday, picked up the suit on Sunday, and went for the interview on Monday morning. And so the rest is sort of history. 2 months later, ended up moving to the city and starting early February 2016 with New York City Energy Efficiency Corp, or NYSEG as we like to call it. So we're a clean energy finance company, basically a bank with an engineer. And our mission is all about reducing greenhouse gas emissions by financing these clean energy and energy efficiency projects, as well as part of our mission is to mobilize the market at large for more investment into this critical space. So sort of 5-second elevator pitch, if your project saves energy, we can finance it. That could mean you replace your boiler in your building with a more efficient one, adding better controls, adding solar panels on the roof. And my job as an engineer is to sort of leverage the experience that I had in my old job in consulting. So, you know, identifying what the energy savings technologies are that are part of the scope of work, reviewing the savings calculations, managing the technical and construction risk associated with each loan that we put out. To date, we've mobilized $173 million in clean energy projects. So what is the role of financing in clean energy? Well, basically we lend money to buildings to implement these clean energy projects. The basic loan is just like when you purchase a house with financing. You put 20% of the cost down in cash, and the remaining 80% is paid by the bank upfront as the loan. Of course, you do have to pay the loan back over a certain period, but what that means is that you get 5x or 5 times the leverage on your cash. So you can do a 5 times bigger project now than without financing. And, you know, people do that for different reasons. Sometimes they don't have the cash on hand. Other times they do have it and they want to preserve their cash reserves, you know, in uncertain times like we're in. They don't want to spend money and they want to share the risk of doing this bigger project with someone else like a bank. And that's something, you know, that's also important about a loan. You're sharing the risk. And another important point I wanted to make about financing is it's really taking a project that has a high first cost basis and reducing the first cost basis and amortizing those payments to more of a cash flow basis over time. So the sort of ideal project is when you can pay for that loan by the energy savings project, like Barry was talking about. So, you know, your LED lighting replacement costs $100,000, but it saves $20,000 a year. So that project will pay for itself in about 5 years, just from the energy savings it generates. So at NYSEG, we could say, yeah, we'll provide you a 6-year loan so that each year the savings from that lighting project will cover the loan, cover the interest, and leave a little cash left over for the owner that didn't exist before. After that 6 years, the system's totally paid for and they get the $25,000 per year in savings that never existed before. So, you know, we look at each project as sort of a mini business, a startup, if you will, in project financing. So, you know, looking at the opportunity, which is revealed many times with the energy audit, feasibility study, development of a business plan that describes what the opportunity is in terms of benefits, challenges, costs, savings, and implementation strategy. Pull together a team of people to execute the plan, contractors, design engineers, and then pitching that business case to a building owner, or if you're looking for financing or outside investment, to those parties. Then it's executing your plan and monitoring and maintaining the project. So there are many people working together and needed to get these projects done. You know, the question you can ask yourself is, what part of that process do you want to be involved with? Is it the financing? Is it the engineering? Is it the auditing? Is it the contracting? Is it the project development? Is it the, you know, the data and the metrics? You know, there's a lot of opportunities. And I guess that's a nice way to put it. Like we talk about how we have a pretty disparate sector in some cases, like a lot of siloed specialties, which makes it difficult. But there are a lot of different parties involved in these. So in closing, as many of you are considering careers in sustainable finance or energy engineering for that matter, you know, this is a young sector. It's growing. As Robyn was talking about, you know, corporations are putting together ESG plans. They're hiring energy managers, sustainability professionals. Governments are implementing more and more aggressive carbon goals and efficiency requirements. You know, so there's a lot to do, and this is a critical industry to be part of, and one that will need many more hands on deck. And so taking just a step back from the mission of this work, just want to encourage you to be entrepreneurial in your job search, and in your company that you end up working for, you know, to take professional risks. You know, if you want something that you have never had, you're going to need to do stuff that you've never done, and you got to be creative. So you don't say, hi, I'm just following up on my job application. You know, ask about specific project you heard about in the news or on their blog. Ask about what critical problems need to be solved at the company. Demonstrate that you know something about the work that they're doing and how you can help. You know, so it all takes work. You got to drive the bus because no one else will. So, and I'll just conclude with, you know, be prepared to push the limits until you fail and keep working at it. Baseball Hall of Famer Reggie Jackson hit 563 career home runs. He holds 2 World Series MVP awards and was the American League MVP in 1973. He was an American League All-Star for 14 seasons and won 2 Silver Slugger Awards. And in 1977, Mr. October, as he was called, won the Babe Ruth Award, honoring the player with the best postseason performance. He was one of the hitting greats. He also struck out more times than anyone in history. So you're not going to get everything right off the bat. So let's get to work, and I'll close there and look forward to the Q&A. Thank you.
Nice, thank you, Patrick. You know, I think it's really important everything you highlighted, from your inspiration from your academic background into your different roles and how you're driving projects now and helping finance them. And you kind of gave a good segue to a couple of questions that I had that I think we can just kind of open up for, you know, a little 15-20 minute discussion. We have some really good questions coming in as well that we'll touch on later. So in many ways, I think a lot of you responded as to what's the importance of green finance, right? And if you would like to highlight anything else, please do so. But I guess, you know, some additional kind of questions building on that is, do you find any stark differences or similarities between the traditional finance that, you know, you were doing before? Maybe more so this is for like Zaira and Robyn, versus, you know, green finance, sustainable finance? Do you find investors are looking for other things? Do you find your projects are, you know, how would you say that those similarities and differences measure? And just feel free, whoever wants to unmute themselves and start.
Sure, I'll take a quick crack at that. Look, investment banking is not an altruistic industry, and finance is not generally known as being altruistic. And you know, what I think is actually exciting and what brought me into this industry is that these investments in sustainability and ESG are not about altruism. they're about seeking better, equal to, and in some cases, often cases, better returns on an investment because the attributes of the business that you're investing in are sustainable. And if they're sustainable environmentally, they're also, the data is coming in, also proven to be more resilient during times of economic hardship and hence more sustainable financially. So I think while earlier on, maybe 10 or 15 years ago, and still today, there are certain investors in my industry who will invest for what we call a concessionary return. So a lower return perhaps, for the counterbalancing privilege of investing in a business that they feel good about or is sustainable. I think that we're shifting today to a paradigm where investors look at sustainable finance as sort of just another investment, another criteria that they use when analyzing an investment. And I think that's exciting. And I think that that's a critical turning point to getting this to sort of the mainstream and unlocking the trillions of capital that we need instead of billions to really transform our economy and the way that we, the way that we run our world into a more of a closed loop cycle economy rather than a consumption-based economy. So I think that's a critical transition that we're seeing. Hopefully that's helpful.
Go ahead, Zara.
I can go ahead and add on to that. Thanks, Robyn. And I think I can echo your statement. So in my role at JP Morgan, I had also worked with a lot of leadership in helping them, like I had alluded to earlier, and helping them evaluate a lot of these investments. And these investments were particular investing in different initiatives that are around development of renewable energy. So whether it's signing power purchase agreements or actually owning the assets on built on JP Morgan corporate buildings. When I worked with leadership on those projects, a lot of the number one question and a lot of the concerns were about the return, right? What's the NPV? What's the IRR? Yes, they did consider the sustainability aspect of it and the aspect of getting ahead of the other banks to show that the bank is gearing towards being more sustainable. Yes, that aspect was there, but the number one question was, what's my return? And if the returns didn't pan out, the project usually didn't make it through the investment committee. Now I get to work with the leadership team at Entersol. Like I mentioned closely, I work with the CEO and the CFO in a lot of decisions around the profitability and the financial performance of the company. And I will say that the leadership here, although the profitability is top of mind, funding our operations is top of mind, but our ultimate mission of helping companies transition to more clean and sustainable power is number one consideration. So we will, although the gross margin and the net income of the company is something that we definitely consider, I will say that achieving our mission of helping the companies is something that would trump that in a lot of the decisions and conversations that we have.
Yeah, no, that's great. And I think it's, obviously it's finance, so the financial profitability of a project will make sense. Or I think like for Chris and what he does, my understanding is like low income, households, how to help them get finance, correct? To be able to have energy accessibility and equality. I don't know, Chris, if you have anything else to add from a different perspective.
Yeah, so the projects that we'll work on will be of they'll go from the single family residential scale for solar projects all the way up to a commercial and industrial scale, commercial and industrial scale project that's intended to serve a number of low to moderate income households. And the question for the person who's installing a 6 kilowatt system on their house in Western New York is the questions that are being asked are the same for the large 6 megawatt system that's being built somewhere else upstate. And it comes down to, I guess, the overall finances on what the return is. For commercial industrial scale projects, there's a faster anticipated rate of return. If the return on investment is going to be, over depending on over 7 years, 7 to 10 years, that gets iffy depending on the type of project and what's involved. But for a residential customer who cares about their long-term electricity savings, the lifetime of the project is anticipated to be 25 years. They have a much higher, or they'll have a longer term expectation for the return on the investment. And then the question becomes, I guess a lot of solar financing is related to monetizing the tax burden. And so that you have to get a lot more clever about that, especially when you're talking about multifamily housing. But it's always the same question. And then from the state, it's, all right, well, what's the gap? And then what are the incentives to cover that gap? If someone, if they can't afford to pay for a system, then all right, then what would make sense for them if they got a PPA or a lease system? How can we ensure that there are protections in place so that there's not a predatory escalator that's put in the system that's portrayed as, oh, you don't have to pay anything up front, but it's going to harm a single family home. But then with an upstate system, it's all right. The federal and the state, well, the federal incentives are stepping down for the income tax. So how can we accommodate that if we're going to get to our long-term goals? The state is trying to install or incentivize the development of 6 gigawatts of solar by 2025, and how can we monitor the market of it? So I guess it's trying to get Robyn and Zahira to look at New York and go, great idea, this makes sense, and to hand out the loan. And if they say no, and Barry can't get it, and Patrick can't stack it with what we have, then we have a problem.
That's a really nice way of connecting everyone. Barry, please go ahead.
Look at the loan. One of the, in answer to your earlier question in terms of obstacles, and where Barry does help in particular, is that most lenders want to have a senior secured interest on their financing. And in order to do a number of these energy efficiency projects for buildings that have mortgages in place, there are prohibitions against additional debt or secured financing that the lender doesn't like. And so Barry Capital and others can provide unsecured or junior financing to enable those energy efficiency projects to happen.
All right. Was there anything else that anyone wanted to add just on that topic, on what you think is important about this? All right. With that being said, I think I had another question just kind of about the challenges of green finance and incentives. You kind of seem to have covered some of those, but I don't know, does anyone have anything to highlight there with any challenges?
Look, maybe just one overarching remark, because I think there's still a lot of misconceptions out there that just because something is green or good for the planet doesn't mean that it's not also financially a strong investment. So I think there's still some stigma to work through, frankly, but I think we're seeing, again, a transition in that mindset. So it's a welcome one for sure.
Yeah, no, that's a great point. And as I think Zahira mentioned in her introduction, when you start to notice what other countries are doing, Northern Europe with the wind energy, for example, even Northern Africa now doing a lot with solar panels and utility scale, you start to see the viability of it. And I think in the US, that mindset is changing rapidly. Patrick, I saw you were about to say something. I don't know if you had anything to add.
So Barry brought up a pretty important barrier you know, a lot of the buildings that are seeking financing have an existing mortgage, which they don't like other banks coming in or lenders coming in and saying like, yeah, we want to, you know, put a loan on this building as well. And if it goes south, we want to take out our equipment. So like NYSEG, for example, has some recourse to the equipment installed. For example, if we financed a solar array on the rooftop, you know, we would want to take that down and sell it on a secondhand market in theory, if things went south. So that's a barrier. So getting consent from existing mortgage holders, you know, we've done it, but that's a challenge. What Robyn was describing, I couldn't agree more. It's kind of a educational piece, like that financing is available for doing these types of projects, and that it can help you do more quicker. You know, in New York City, we have, you know, compliance costs that are forthcoming with Local Law 97 that people can start to worry about. So timing is an issue. And then, you know, something additional would be that there's a lot of moving pieces to these. So, you know, someone like Enter Solar, they're a turnkey provider, and there's a lot of value in a turnkey provider because they do the study, they figure out how big your system is, they procure it, they construct it, they manage it, they own it, they finance it, they do everything, which is pretty cool. And with efficiency, there's actually very few companies that can provide all that turnkey service. They do exist, and we've seen it as a pretty successful implementation model through energy savings agreements and such. But that's also a barrier. Not, you know, if I'm the owner, like, oh, I got to figure out like what engineer to call, and like, should I ask my bank if I can get a loan? Like, and who's gonna like build it, and like, is it warranted? Like, so many questions, right? Like, these are even solar, which is, you know, can be pretty straightforward, like can be complicated if you don't know. So, you know, that's a barrier. It's getting better and there's more information, but that's a barrier as well. I just wanted to say a quick shout out to Ace of Swords and Claudia on the participant list. Thank you guys for joining.
Nice. All right. Okay. Yeah. There's, as you said, you know, there's a lot of stigma still, but that's being broken down. And, you know, there are different aspects in terms of not just financing a project, but all of the intricacies of taking a project from origination all the way to execution, in whether it's building energy efficiency or renewable energy projects. So they all come with their obstacles. And, you know, I think kind of leading off of that, we have some pretty good questions here. I think before starting off with all of the general questions, there's this one specific question for Zaira. So we'll start off with that one, and then we'll move into the specific, the general questions. So the question for Zaira is, does she or her team work on the technical and economic aspects of her renewable energy projects? So I think just the renewable energy projects. And if so, are there any examples of the projects that you work on, the combined facets of project analysis?
So I don't, my team doesn't. We don't work on I'm not project driven, right? I don't focus on specific projects at a time. What I help is kind of help financially and operationally manage the company. So my team touches on a little bit of everything, like whether it's origination to project development to project managers, project coordinators, project engineers, and all the way to closeout, to kind of keep tabs on all of the projects that are going on at the same time. And we have over 100 projects at a time going on in different stages of the project lifecycle, keeping tabs and making sure that not only they're moving through smoothly and being able to help the teams get ahead of any risks or obstacles, but at the same time to make sure that we're also keeping tabs on how the project is progressing cost-wise, returns wise, and gross margin wise. So I don't, to specifically answer the question, to directly answer the question, I don't work on one project specifically at a time. It's kind of like all projects at the same time, and having a high level view on where they are and how they're doing.
Wow, your job sounds pretty intense, reviewing all of them. It's impressive. All right, so I think we can move from there into, the general questions. Some of them have kind of already been answered through my question, which was, obstacles in changing perceptions within the finance community. And another question, which was similar to what I asked before, was, have you experienced any disparities between short-term financial profit ventures and long-term sustainable benefits? And that's a question for everyone. Would you like me to repeat the question? The last one. Have you experienced any disparities between short-term financial profit ventures and long-term sustainable benefits?
I can try to answer. Or Robyn, you spoke first.
Look, I think that's kind of a fundamental, sometimes the disconnect and a challenge with financing a project. If the benefits are long-term or they're diffuse and they're a benefit to society, but not, any one particular individual or entity that's going to fund it, you can have difficulties of adoption. I think energy efficiency is a great example of that. It can take years to recover an investment that makes a lot of sense, but if you as a corporation only finance things with a 5-year or less, payback period, a lot of good projects might go unfunded. So I think a lot of what we try to do in finance is use, partly is try to, we work hard to try to identify investors who are more patient sources of capital and might have a longer term, time horizon on their investment. So think of a sovereign wealth fund or a pension fund. A lot of those guys are some of the biggest investors in renewable energy because they're able to offer a lower cost of capital for, a 20-year contracted solar project. So, they will be more competitive than a more sort of short-term focused private equity investor, for example, or perhaps the public markets. Public markets are also not particularly patient when it comes to seeing and looking for financial results of an investment. And the stock price can move on a daily basis and you can get punished even if your vision is a good one. So I think, what we try to do is use structure when we can to share risk appropriately, bring in, partner up different financing entities that have, value for certain benefits versus others. In the renewable industry, we have something called tax equity. You can have debt, you can have common equity investors, and we try to find the right combination to make sure that you're not forgoing, projects that make good sense. But I think it's a challenge, and but we're getting closer, and some of the policy mechanisms that are put in place to try to help address some of those upfront adoption costs, I think are really important. So, but it depends on the investor, what their time horizon is.
So from the NYSERDA perspective, within the distributed energy resources team, the closest challenge to this happens when you blend different technologies that are related to sustainability with a project, where and there's a balance that happens with the client, the customer themselves, the developer that maybe that's involved in the project, and what the short-term costs and long-term savings can be. And I guess an example of that would be, there are times where a customer will look at the savings that they would get from a solar system, which might seem impressive, but if you installed and went ahead with more aggressive energy efficiency measures, you could see more immediate energy savings, cost savings, and you would either maybe reduce the size in the solar system that you would invest. Similarly, if you were to install a heat pump or some sort of clean energy or cooling system, and you're going to electrify your building, that's going to, you're going to eliminate your natural gas costs, but your electricity costs are going to go up, in which case, the size of your solar system might be different, and that would all be impacted if you incorporate some sort of energy efficiency measures. And so there's a balance where you can have a lower cost and thus maybe a shorter term, a project can be framed in a way, and there's a lot of considerations from our end as to what the relationship will be of the incentives. If we make certain incentives too aggressive, we can kind of cancel out something that long term would be better for the customer if they can combine these measures. And it's as technology changes and improves, and as you get more data, that balance and what you're seeing in the market, what becomes more common is it's something that you always have to keep your eye on, that you're not creating these perverse incentives to maybe exclude one type of system that as the state of New York, we ought to be supporting more of.
I think that was a really good point about packaging the measures together, Chris. It's easy to take the very low hanging fruit and forget about those deeper retrofits that you can do. But packaged together, like, it can be pretty attractive and something financeable. One exciting thing that's happening soon in New York City is New York City PACE, which property assessed clean energy. These are loans tied to the property tax bill of that people get, quarterly or biannually, and they do have longer terms. So it starts to solve a little bit of the barrier. You can get a 20-year loan, where our standard loan maybe like kind of maxes out like 10, 12 years, like 15 years would be super long for us. But you can get a 20-year loan, and there's some more sort of seniority for the lender in those projects as well. So there's some attractive benefits of PACE loans that addresses some of the, long-term, to unlock maybe long-term benefits, deeper retrofits, larger packages of measures paid back over a longer period of time, such as facade or whole system retrofits, that do cost. Windows are expensive, and replacing your walls with insulated walls, super insulated walls, is expensive. So that's a tool, that people will hopefully start to use. We're going to be the administrator for that program, looking to launch probably like around Q1 of 2021. But it's still a little bit TBD with the city's been kind of doing their COVID-19 response, but that's definitely on the horizon here.
That's really exciting to hear. And I just wanted to make a note that, as you think about finance is an enabler for everything else and all the technologies that, we want to deploy. And what's exciting, I think, is that the more smart minds that come into the industry, the bigger an impact we'll make. Some of the finance innovations that have really transformed adoption of energy efficiency and renewables in this country are, on the energy efficiency side, companies that are, energy service companies, which will basically finance your retrofit for you in exchange for essentially a share of your dollar savings over a period of time. I think, that was an innovation that helped reduce that upfront investment that certain, businesses just can't justify because they have hurdle rates that are just too high to finance these, very sensible investments. On the renewable energy side, something that I think has really transformed adoption, and this is both in the utility space as well as the residential space, is power purchase agreements, where essentially, say, a homeowner wants to put solar on their roof, it costs $20,000 or so to buy a system. That's a big chunk of change for people to pay out of pocket. Companies that I work with have developed ways, financing structures such that they will own the system, come install it on your roof essentially for free, and you sign up for a 20-year contract to buy power from the panels that are now on your roof. That company, that provider, can then turn around and finance those cash flows in the capital markets to help them raise the capital up front that they need to then go deploy the next installation on your neighbor's house. So, and I think that those things have really decreased the barriers to adoption. And I think that's, you know, again, one of the roles about finance. It's an enabling mechanism, but it's crucially important because money, you know, we all know money matters.
Yeah, no, that's a great point. Just technology innovation in general, and kind of, as you said, different minds coming together to figure out how we can get through these barriers. So I guess kind of leading on to the last general question before we move to the career advice, and, you know, because we do have a lot of people here interested in the career aspect. It was a question for all the panelists, and they wanted to know if anyone is leveraging big data in project financing or development. And if so, in what context? Things that come to mind, you know, I guess are like building energy efficiency monitoring systems, energy usage, I guess things of that sort.
I'll jump in. One thing that we've been developing over the last couple years is quantifying the benefits that, you know, the actual savings of the projects that we're doing. So, you know, when we look at a project initially, we say, what are the projected savings? So what do we expect this project to save? And that goes into our underwriting in terms of, if we save, you know, 50,000 kilowatt hours, that translates to, you know, X amount of dollars per month, and will this building be able to service the loan with this sort of you know, cash flow, and so looking at the actual data, we can start to inform our underwriting. So we see which projects are performing better than others with the actual savings analysis. So how these buildings actually perform, especially with efficiency, can be, you know, is a bit of a barrier as well. People are like, I don't know if it really saves energy like it supposedly does, but so we want to get to the point where we can have more confidence around the actual savings of a project. And kind of the holy grail is underwriting to the actual savings, which, you know, Robyn was talking about the sort of energy services agreements, or with the PPA, it's a similar concept. It's kind of like a performance contract that like guarantees those savings. Outside of that, you know, we don't really underwrite to the savings. But so looking at sort of, I don't know if I'd call it big data, but I would say it's small to medium-sized data about our project portfolio, like how they perform, and saying like, oh, well, solar projects tend to like get very close to their actual generation projections, you know, lighting projects as well, but variable frequency drives on fans and pumps, you know, those only achieve like 50% of projected savings. And so we could say those specific technologies are riskier, or we underwrite them differently than lighting and solar projects. So we're hoping to use, you know, this data to help better inform, make more data-driven decisions on our underwriting process. So that's something we're doing with energy data, and we collect that on all the buildings that we finance.
I guess I would just say just very briefly. So the challenges, the barriers that are facing distributed energy resources, and especially solar, aren't really driven by, I guess, solutions that you'd get from gathering and analyzing or predictive analytics or anything like that big data would address. The challenges that are facing distributed energy resources are soft costs related to permitting, siting, interconnection, and for the low to moderate income customers, you know, there's access to capital, and then there's also challenges related to monetizing tax credits or property tax abatement. And so the focus of the incentives are more addressing those soft costs, as well as figuring out what ways in which, you know, we can track where the market is going. But, you know, they're at this time, especially for solar, they're not looking at that yet. You know, we're still trying to build the market, which has grown considerably.
That's great. Thank you both. Yeah, it's been really interesting, to hear. You guys are just all really like experts in your field, and you know a lot. So I guess, someone asked some questions a little more related to career advice and tips and tricks. And, they're asking if there are an increasing number of opportunities, job opportunities in the sector. And my understanding straight off the bat is yes. I mean, you all have kind of highlighted that over and over again. I guess in your respective fields, what specifically, what type of skills would you be looking for someone who doesn't necessarily have a finance background? I mean, Chris, you're a great example of someone who's moved into finance in a different perspective. So the questions are, what type of skills and what type of opportunities as individuals with your respective companies, and are you hiring as well?
In sales, the ability to sell and close transactions is a skill unrelated to other skills. So you may not know anything about finance, or you may not know anything about engineering, but if you have the ability to sell and close a deal, that's a very valuable skill that's definitely in demand.
I think that's a great point. Most of us at the end of the day are salesmen in some capacity. Same here. My job is to go out and originate equity capital markets transactions. But look, I think, if you don't have background in finance, then play up something that you do have a differentiated strength in. So whether you come from a policy background, maybe like Chris and frankly myself, I had a policy sustainability background coming into finance. Other than an MBA, which admittedly was helpful, I think, as a groundwork or foundation. But I didn't have any experience in finance. I interned at Walmart during my MBA years. I worked at think tanks and, environmental consulting companies, but I brought something that was different than all of my colleagues who had only ever worked in finance and frankly weren't familiar with some of the policies that are enablers of renewable energy or energy efficiency, et cetera. So I think it's really about identifying, analyzing the job opportunity that you want and identifying what you can bring that's differentiated. And leveraging your contacts from your network, whatever you've done. I think increasingly sustainability is being incorporated in many different companies. So while the mission of the company might not be inherently sustainable, you could find a role that is, kind of like Zaira did. Or you could go work in a completely, non-finance function at a company that does green finance. They need sales, they need operations. Somebody's got to manage billing and collections. There's a different way to contribute to the mission without necessarily being the finance person.
I can echo both Barry and Robyn. Barry, I completely agree with you in terms of having the ability to sell. At Intersolar, we always say you always have to have the customer top of mind, always look at things from a customer's perspective, wherever you are in the project lifecycle, or even if you are in a position like mine, where you kind of have a handle on multiple projects at the same time. So I completely agree with that. And with you, Robyn, in terms of networking is, I think networking is, I think, one of the biggest, in my opinion, things that can definitely propel your career. Like I mentioned earlier, I had taken a few months off after JP Morgan to go travel around the world and see a lot of different countries and cultures, and in the middle of that, just solidifying kind of my passion and my desire to be in renewable energy. And when I came back, I kind of came back a little anxious, because I was like, okay, I've taken almost a year off. It was 7 months really traveling outside, and then 4 months here and there, inside of the country, traveling and visiting my friends. I was like, okay, I took a kind of a year off. I do have about, at that time, I had about 6 years of experience. I'm like, I hope that it won't be too hard for me to get into the job into the workforce again, and it wasn't. And it wasn't because of the network that I've built. So I've reached out to a bunch of my contacts at JP Morgan, at Ernst & Young, at GE, and was able to stack up several interviews in a row because of my network, because of the fact that I had people refer me to the hiring managers. And frankly, for Enter Solar, I think one of the biggest reasons why I got kind of hired on pretty quickly, within about 2 weeks, I believe, was because there's somebody at JP Morgan that had referred me to the owner of Enter Solar. So I think having, broadening your network, constantly being curious about what other people do, being curious about the industry, asking questions, reading up on things, and just showing your genuine interest and your passion in the sector goes a long way. And particularly for finance, what we do at our company, so we have a lot of business development analysts that join the company who are on like the origination / project development group in that aspect of the company. However, a lot of them haven't had a lot of finance background. And what we do encourage for them is to at least try to take their level 1 CFA exam, which gives you a really good basic foundational understanding of finance and accounting. And I think many of the finance professionals here know that the CFA exam is not an easy exam. It does require a lot of focused dedication for at least 6 months, but getting involved in that and studying for the CFA exam definitely shows how interested you are in getting into the field of finance.
I was just going to add, I love this thing my old boss used to say. He would be like, yeah, I first started at NYSEG. He's also an engineer. Like, I was on Investopedia like every day. Like, what is pari passu? But to the question about kind of the market, you know, a lot of companies are tightening their belts right now. Hopefully not laying off employees, but that is happening. But people are looking at their budget. They're just being conservative, even if, you know, their deal flow hasn't slowed too much. You know, construction all but stopped in New York City for like 2 months. So, you know, it is affected, and people are thinking pretty conservatively. I mean, that said, you know, I came out of college without a job, and, you know, December 2008, and I was just like, okay, January 1st, like, I'm gonna hit it as hard as I can, and ended up getting hired April 2009, you know, during the depths of the recession. So at that time, this is a bit anecdotal at this point, but, you know, companies were looking to unlock energy efficiency as a way to save money and kind of tighten their belts by saving and sort of unlocking the potential in these projects. So there was work in this space available during the depths of the recession. We were actually on a hiring spree throughout late 2008, 2009. So the cool thing about the sector is that, you know, not only are some of these projects like resilient, like I think this space in the industry is a little bit more resilient than some other jobs. It's more essential.
Yeah, and I can just speak anecdotally for some of my clients. You know, I work with companies that are residential solar installers, utility companies, you know, clean tech companies. Yes, there's belt tightening and cutting where they can, but you know, surprisingly, the growth in the residential solar sector has been, you know, it's double-digit growth, and so I think there's still opportunities out there. And again, when these investments make a lot of sense, that, you know, they need to continue to hire to keep their businesses rolling. So don't give up. It could just take a little bit more time. I think Patrick and I, sounds like we graduated about the same time. Took me 4 or 5, maybe 6 months to find a job. You know, and in the meantime, I lined up a master's degree at Columbia, which I didn't end up going to do, and I lined up an internship, which was the next best thing from that. And then when I finally found a job, I bailed on the internship and took the job. But look, if you can't get the job initially, maybe you could volunteer somewhere like, like this organization that we're with tonight, and meet people through it. So I think there's ways to get involved that can carry through even the worst recessions.
Yeah, big picture in solar. In the state of New York, there were 60 kilowatts of solar in 2005 that have been installed. By 2015, that was up to 700 kilowatts, and now, the last I checked, we're at about 2.4 gigawatts. So big picture, the solar industry is growing quickly. Smaller picture, microcosm, this year, the pause orders completely stopped all construction statewide, and there is a lot of questions about the health of the sector. It is subsequently rebounded in terms of the activities that have been happening both in New York City and across the state. But hopefully that will continue. And overall, I guess going back to big picture, they talk about the solar coaster, and that as incentives come in and come out, you kind of have these boom and bust cycles. That the overall profitability of the projects don't in big picture don't change, but in states they can kind of come and go. And I guess the two skills that are outside of finance and engineering that are really valued. If you start in sales can get you into a lot of different areas of the project life cycle. And when you have that experience with the project development, it makes you far more marketable to a lot of different firms, because if you're the only person that understands that no one is going to be able to drive a truck down a crowded street and install, like a multi-tiered racking system on a property because you worked on that project and you sold that, a customer, or a customer explained that to you, it gives you insight. And the people I've met people at NYSERDA, the ones who have done that racking, who have had to install squirrel guards, because that can be a big issue to solar. And when you know about that, it changes. You bring an insight that someone who maybe has a policy background that I had, it just does not know about, and it's important, and people seek that and value that.
Yeah, no, that's wonderful. I think you've all touched on like really good skills, transferable skills, ways of getting into the sector. The challenges of COVID right now, but also the potential growth in sustainability in general, along with other opportunities such as volunteering and just kind of getting your foot in the door through networking. We're coming into the end of the session, and I'm kind of sad because this has been really great. You've all been wonderful panelists. We've had some really great questions. And if we were in person, we would go all out and have a drink now and continue our conversation and network a little bit. With that being said, I think all of you that signed up to the event, I had linked, the LinkedIn profile of each of the panelists. I'm sure, they'd be happy to connect, and you'll probably see them posting, great articles and different things that you can read up on and get more information about sustainability. With that being said, I would just like to highlight how you can find out a little bit more about what we do at Green Home NYC. As I said, we're a group of all volunteers. We've been around, focusing mainly on New York City, but now with COVID, we've kind of expanded, and we talked a little bit more about the whole state as well, since remote work is totally possible. You can follow us at Green Home NYC on LinkedIn, Facebook. We're also on Instagram, because a lot of people are using that. Please sign up to our newsletter, and if you're interested in volunteering, writing articles for us, we also do a blog to get more information out there. Please feel free to reach out. Once again, to thank all of the panelists. And if anyone has any questions, again, feel free to reach out at Green Home NYC. And we look forward to hosting more events.
Thank you so much for having us. Real pleasure. Thanks for pulling it together.
No worries. Thank you. Thank you. Have a good evening and, you know, enjoy the nice weather wherever you are.
Thank you. Thanks for having us. Bye.
Thank you.
Thank you.
See you
Thank you,
all.
everyone.